For more on what's ahead for the Fed and global interest rates after this morning's message from the G7, let's bring on our guests. Joining us right now is Peter Fisher. He's senior fellow at the Tuck School of Business at Dartmouth. Also, John Taylor, Hoover Institution senior fellow and Stanford Economics professor. And gentlemen, welcome to both of you. John, let's start with you first. The G7 came out today and talked a lot, but didn't actually show any action. Was that the right move?
Well, I think they all made some reasonable, good statements. The finance ministers mentioned how they're prepared, even on fiscal policy, healthcare policy. The central bank governors mentioned continuing growth and worried about inflation as well. And, of course, they mentioned the IMF and the World Bank, which are significant players at this point in the world economy. So I think it was a good statement. They met, they talked, and they said what they think. Peter,
Steve Leisman thinks that we could still see a rate cut from the Fed before the meeting, the next meeting, the middle of this month. You think that is likely, just based on where we've seen the markets to this point?
No, I don't think it's likely before the meeting. I'm hoping they will wait till the meeting. Look, we still don't know quite the mix of supply and demand shock that the virus is creating. Clearly, there's a supply shock to global supply chains. There's going to be a demand shock to consumption and investment as people stay home around the world. So it's a mix of both. I'd feel better if the Fed waited to the meeting and thought harder about it and had a good explanation of what they thought a rate cut would do in this environment.
John, you agree with that?
Yeah, I think at this point the meeting is a good time. They're talking clearly. It's something which each central bank has to decide on themselves. Conditions are, of course, different in each country. So I think the usual approach will work just fine.
What are you two seeing as professors and economists who are kind of measuring through things? It's really hard to get a feel for just what kind of economic impact this is having, because it seems like the information is probably changing on a day-by-day basis. What are you watching? What are you trying to look to assess that? John, you first.
So there's a tremendous amount of uncertainty. You want to hear what the healthcare experts are saying, the description of what happens in different parts of the country, different parts of the world. There's still a lot of uncertainty. I don't think they're trying to purposely hold things back. It seems to me the U.S. officials are being quite explicit and transparent about it. So that's what I'm looking for. To what extent will this spread? What happens with other countries? What happens within the United States?
Peter, how about you?
Yeah, I want to look at the things I'm usually looking at, PMIs, consumer confidence, and see when they start to move. So I don't try to look at something different. I agree with John. We should learn what we can from the medical experts. But I'm going to try to track the same things I normally track and see how big the moves are.
You have to wait for those numbers. And sometimes I feel like by the time we get them, they're going to be pretty dated, no?
Yeah, that's we always have this trouble predicting the future. Go ahead, John.
I was going to say the bottom line before all this began is pretty good. So you don't want to lose track of that. In fact, some numbers are coming in. There may be a bit of lag, but investment looks a little bit better. So keep that in mind. And I think to most extent, this coronavirus stuff has got to be temporary. Hopefully it's not too severe. And that temporary aspect has to be taken into account whenever you're considering a fiscal or monetary action.
So, John, you think this is going to be a V-shaped recovery at some point?
I think most likely it will be. I hope it's not too big a V.
Yeah, I guess, Peter, that's the question. Is it a V, a U, or something worse?
I don't know which it's going to be. When I think about global trade, one thing that worries me a lot is global trade, by various measures, has been slowing down for a while. So we already have a sort of momentum in the wrong direction on the flow of global trade by some measures. So I hope it's a V, but it could be U, it could be L. We don't know. That's, again, part of the uncertainty I think John is referring to.
You know, you guys think that the Fed should wait, take its time, try and figure out what's happening, but the market has already jumped to those conclusions. When you look at the 2-year, the 10-year, even the 30-year, they are anticipating, investors in the bond market, that there is going to be a cut. It's going to be a big cut, and it's going to come rather soon. How much does that box the Fed in? John, let's start with you.
Well, I think, first of all, that's a sign that the markets are looking at the Fed, and there's some communications about it. Jay Powell had a statement last week at the G7 today. So that's moving markets already, to be sure, and I think that's just fine. Doesn't mean they have to move tomorrow or before the meeting, because the markets have anticipated what they're going to do.
Peter, you get the last word.
Yeah, I'm worried about the Fed, and I'd like them to take a little time because I think they've got to disentangle themselves from the equity market. Every decline in equities from all-time highs is not the kind of financial tightening the Fed should be responding to or really can respond to. The Fed also has got to figure out what it's going to do with its QE4. Are they going to blink and keep doing it, or are they going to unwind their expansion of the balance sheet to respond to pressures in the money market from last September? I want them to try to sort those two things out, and I think they need to take the time to the meeting to do that.